Good morning, everybody. This is Lee DiLorenzo. Thought I'd make a quick recording before I get into the office this morning. It's a day after the midterm elections here in the United States, and I think that the markets will possibly have a little relief rally here because we got what was widely expected from the polls, that the Dems did take the House. The Senate was retained by the Republicans, and what this means is some good old-fashioned gridlock, like we haven't heard that before, maybe a little more contentious environment. But I don't think we'll have a lot of regulations undone because of what happened, and I don't think we're going to get a lot of crazy spending put forth because of what has happened in the elections. I did note that the U.S. Treasury yield curve is flattened a little bit, with the 30-year coming down and the 10-year going up. I'll be watching that closely. I know the banks were finally enjoying a little bit of opportunity. They like the curve to be a little steeper. Sometimes the bond market can be forward trading, so we'll make sure that they're not seeing something that we're not as far as the economy slowing down. I think all eyes will turn back to China tariff discussions. It's very important that we move through this. Right now we are in a tariff war, and for those of us that are acting like we are trying to avert one, we already are in one. We don't want it to get worse, and we want to see some relief. So hopefully the negotiations will resume, and we can get some uncertainty out of the way before the end of the year. Back to the elections, what does this mean to certain sectors? Really, the only thing I can see, and this is more for aggressive investors, is that some people were voting about marijuana in their states, and I believe that the vote was more liberal, and that that could be good for certain pot stocks. So that's really all I've got for this morning, and I hope you have a terrific day. Thank you.